Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinion as we go. It's generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive in here. Let's see what people are sharing on social media, and I'll sprinkle in my opinions. If you want to follow me at Finance, and if you want to join our community, it is finding-value.com, where I go over individual companies. I do trainings. We just did a share buyback training on how that impacts earnings per share growth for a lot of the companies. We went over a scenario here recently of basically showing how that really rewards shareholders. And when we get a little bit of share buybacks, a little bit of production growth, and a little bit of price appreciation, and how that really trickles down to that bottom line. So let's dive in here. We got Art Berman here. He says total liquids production has recovered. That's because of the expansion of natural gas liquids and other liquids. Energy blind people like Doomberg see this as proof that oil will last forever. So obviously there's a little bit of friction, tension between maybe Art's opinions and maybe Rosenzweig's and even mine, because I don't think oil is going to be being produced at ever greater quantities forever. And we are producing a lot more natural gas liquids and other liquids. Crude, if you look at crude here and look at the crude and condensate brown area, in 2018, we produced 84.6 million barrels. Then we had this large move lower in the COVID shutdown. And now today we are producing 81.9, a decline of about 2.7 million barrels a day. That's really big deal. That's a really big deal. And the heavier crude, kind of the heavier oils and liquids, I think is going to catch a premium here. And if we start to roll over here in the crude, I think things are going to get interesting in terms of pricing of crude oil. We'll probably see some strategic petroleum reserve releases before maybe like the summer. That's a guess. If this doesn't turn around, and I don't know what's going to turn this thing around in the short term. Coming down, URA versus UX1. This is patterns technical analysis. I don't think I've ever shared anything from this person or group before. Are we witnessing the bottom for uranium stocks versus the commodity? It certainly looks like it. Needs to break above the breakout line to confirm. Most technical analysis people always say that. I get it. But we are very low by uranium stocks in this general area. And look how low we are in relationship to the physical metal. So this is URA versus the uranium futures pricing. We are really, really low. Now, does this mean that it's going to bottom exactly here? I don't know that. No one does. But generally speaking, you would have been rewarded buying it here, and buying it where we're located. And if it stays down for a couple of months, maybe even 6 months, I would love that because it gives you a buying opportunity window where you can take advantage of that. These short, small spikes lower and then they just rip to the upside, they don't give you a large window to accumulate necessarily. But we're cheap, and it does look like it's trying to bottom here for URA versus the uranium physical futures pricing. JC Parrots, I shared this Nintendo NTDOY. What's up with these cup and handles forming everywhere? Gold's got one. Nintendo's got one. Maybe these emerging markets and the stocks over in emerging markets, maybe they're going to take off from a weaker dollar. And this is all confluence of evidence of that weaker dollar potentially. Maybe. Or a lot of people they just want to buy video games from Nintendo, I guess. Here's Art Berman, another one. So this is world crude and condensate production remains 2.7 million barrels per day less than in November 2028 or 2018 is what he meant to put in there. So here's 2018, 84.6, 81.9 with the natural gas liquids and other liquids stripped out of it. you can kind of see that we aren't back to that same, 84.6 level. What's going on here, guys? United States, Canada, Brazil, and we can see that some of these are increasing, like Brazil's definitely increasing. Canada looks like it's throwing down a pretty good yellow line there. And then Russia, it looks roughly the same. OPEC definitely looks like it's struggling. And, some people are speculating that OPEC may have hit a production peak, maybe. And that's why they've lowered their forecast production and why they're not really bouncing back with higher production even today. I don't know if that's true, but it kind of seems like it. And we'll see if they can respond if demand starts to inch above supply and we start getting larger deficits and pricing moves on up. What is happening with consumer confidence data? So, consumer confidence fell to 106.7 in February, missing expectations of 115. Pretty big difference there. Meanwhile, January consumer confidence was revised significantly lower. This marked the biggest downward revision since February of 2022. Meanwhile, we have 4 straight months of sharp drops in consumer confidence. Why are consumers losing confidence? I can tell you why I'm losing confidence. Every time I go to the freaking grocery store, my bill goes up like $10 every time. So I go to the grocery store. I barely put anything in my cart. And then when I go to check out, I'm looking at my bill and I'm going, how the heck does it cost this much? Because I barely put anything in this cart. And it's like clearing $100 is nothing. And I go in there and I'm like, how much is it going to cost today? And I'm not even buying that much stuff. So yeah, consumer confidence is going to be crappy because every time I enter a grocery store, I feel like I'm not buying that much more than what I normally do, but the price continues to just like ratchet higher. I do buy beef, I do buy eggs, I buy those things, and they just continue to it's like they just inch higher all the time. So yeah, of course, consumer confidence. When you're spending all your money on food, and then you look around and you're like, well, what else you want to buy? It's like, I'll just buy food next week. Of course, the confidence is going to go down. Coming down, the blueprint to wealth, pretty easy, laid out. Lower your living costs, increase your income, invest the difference. Simple, not easy. The 4th step, if you can do it, is buy undervalued assets. So you invest the difference, but you just go buy undervalued assets and then you just sit on them. Don't sell them. And that's really what rich people do. They buy homes when they're whenever it is, and then they just sit on them and 10 years go by, 20 years go by. Hey, look, I've got a huge increase on the house price. Or they go buy oil in the ground and then pump it out later. That's all it is. It's just a store of wealth. Oil is a good store of wealth or a good store of purchasing power, in my opinion. And that's how I view a lot of these oil companies. If you can buy the reserves cheap, for less than proven developed reserves on some of these companies, or at least less than 1P reserves, it's a great store of wealth. While the U.S. debt increases by $1 trillion every 100 days, all of the world's available above ground silver isn't even worth $100 billion. That is crazy if you think about it, guys. I mean, we're increasing our debt $1 trillion every 100 days, and silver isn't even worth $100 billion. I think that's going to change. This is the silver price in United States dollars. It says it seems like 3 and 6 month close above 24 is a big trigger. I totally agree. Look at this thing. It's ready to go. Let's rip this thing, boys. Let's rip it. There's the big long-term downtrend that we're right underneath. Man, this looks good. What makes it look really good is we've got these large buying pressure candlesticks, small sell-off, big buying pressure candlestick here, which is a bullish engulfing, and then just the sideways move. Oh man, this thing's ready to go. It's ready to go, boys. Let's do this. This looks good. Come on, silver. Let's rip it. Here's URA. So URA back tested. He says we move higher to the next wave is his opinion. The only thing I don't like seeing with this chart in like right now is this big red candlestick. I don't like seeing that red candlestick. Every time you get these big red candlesticks, they generally like to pull back. We are at support right underneath us. We very well could override that big red candlestick. But when I see that red candlestick, I always think caution, because that's generally a start of a move lower, not higher, generally. So whenever you see these wicks at the top, it's generally a start of a move lower. And then you can bounce up. You get a wick at the top at resistance, bounce lower. Now we're above that resistance support line, but we got a nice big selling pressure candlestick. And I just don't like seeing that big candlestick there. Like, get rid of it. The natural gas big short is on. Net longs have fallen minus 700% since mid-October. That seems like a weird way to, you could say like a 90% decline or something. But U.S. natural gas futures open interest increased 3%. Net long positions decreased minus 24% for the week ending in February 16th. So we've got the big short going on in terms of the blue line here. So you've got net long, and then you can see net longs declining, and the open interest is going on up. So could we still have a little bit more downside in natural gas? I don't know. I think it's a good spot to be looking. That's what I think. It is very cheap against all the other sectors, and I think natural gas. We've got a wall of takeaway capacity coming, guys. It's going to be such an opportunity soon, or is right now. Can you catch bottoms with any sort of certainty? I don't think that's possible. I don't think it's possible to catch the absolute bottom. So cost average in, get the general area covered where you get a bunch of shares, just ride it up. That's the best you can really do, in my opinion. This is truly unbelievable. The U.S. national debt is now rising by 1 trillion every 100 days. We did a trillion in 92 days, a trillion in 106 days, and another trillion in about 95 days is what the estimate is. That is crazy, guys. It's just crazy for me to think about how fast this debt is increasing. Will that cause problems in the market? Yes, it's going to cause problems. That's why I like physical metals. That's why I like gold. That's why I like silver. That's why I like all of those things, because of this debt and the speed that it's moving. JC, how about that weekly candlestick in Berkshire? Right at the 161.8% fib extension of the 22-23 base. Probably not a coincidence. And generally, when you look at these, you'll see these dark cloud cover candlesticks that could potentially pull back. We've got one here. We've got another bearish engulfing here that pulled back. And we could see a pullback here over the next few weeks, months. We also are seeing that in the uranium sector. That big red candlestick that I was talking about that I don't like seeing. And that's this one here. Do you think that's a coincidence that's also showing in a lot of the tech stocks? I don't know. So it's something to pay attention to. It's something to look at. And I just notice it. That's all. Coming down, says, where are the silver prices likely headed? Japan provides a valuable roadmap. Persistently, high values of debt have compelled policymakers to consistently resort to financial repression, resulting in a continuous appreciation of the value of hard assets relative to the local currency. In terms of yen, silver is only 13 percentage points away from its 2011 highs. With gold gaining momentum and reaching record prices with authority, the macro environment is setting the stage for a new secular bull market in precious metals. Keep in mind that the gold to silver ratio currently sits at about 90, one of its highest levels in history. Call me a silver perma bull or a gold bug, but I consider myself a macro investor, and I've never seen a more opportune time to build a portfolio of high quality assets that offer leverage to metal prices than now. To reiterate what I said, Overwhelming skepticism is about to morph into a major opportunity, in his opinion. So this is silver in the white, priced in Japanese yen. Silver in the blue is priced in US dollars. The difference is the currency appreciation or difference. And right now, I think with gold starting to move higher, silver is going to be one to watch. We could see a big move. The question that a lot of people have, and I know some people are getting frustrated with the precious metals sector, is how many false starts are we going to get in this sector? Weren't we bullish some months ago on it? I've been bullish the entire time. I'll admit it. I'm bullish on the physical metals massively. Whether that's gold, silver, platinum, even palladium, I'm starting to get more bullish on. So I look at this and it's like, you know what? If I can take enough time, just relax, the physical metals, no big deal, ride it higher. That's the way that I'm viewing it. Now, the mining companies, we'll see. As the metals start to move to the upside, the miners should start to play ball here, I think. Will it take a few months? Maybe. Maybe we need to get more investor sentiment to kind of swap here because it's so bad. So it may take some time, but that's one to watch. Agree, Bitcoin is just a leveraged NASDAQ 100 play. So this is the overall correlation that we've got between the two. BTC's the gold or yellow, and then the Ultra QQQ 100, NASDAQ 100 play, is the purplish line. So yeah, they're very closely linked. A lot of people think that Bitcoin's going to outperform if we get a currency crisis or a bond crisis. I'm not 100% sure on that. When interest rates rise, I don't think Bitcoin's going to go up. I think gold and silver might, depending on where it's located, but I'm not sure about Bitcoin. I don't know. It looks to me like it's just a leveraged technology speculation play. Jay Hinster, he's got the DNN divided by the Sprott fund. Blast is on the way. Hold on for Denison Mines. We are kind of squeezing up here, and maybe we can get a big move where we go to our happy place up there. He's got a nice big smile with stars. So maybe, we'll see. Here's the equally weighted NASDAQ. You can see this big roundish bottom, and we've got an all-time high that we just broke out of. We could have further upside, guys. We very well could. Maybe there's a bunch of liquidity coming, and maybe they're printing money and just putting it directly into technology. I don't know. Here's a new all-time high for gold. Gold futures putting in the cup and handle, and the breakout to a new all-time high. This looks fantastic. I mean, there's like 4 jizzies in this. 4 jizzies. You should be, if you're a chartist, this will make your pants jizz, is what I'll say. 4 jizzies. The first one is cup and handle. Oh, there's number 1. Number 2, we broke to an all-time high. So that's the number 2 jizzy. Number 3, you look down and you're like, whoa, 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 this is a big pattern. So it's a big pattern in terms of time. There's number 3. Number 4, you look at the size of the base, and that size of the cup and handle, the base of this cup, projected upwards, puts you way up there. That's the 4th jizzy. So if you guys are chart guys, you should be looking at this like, man, this is time to go. It looks so good. Hopefully it follows through and gets moving. Steve Harney says, when someone says home values always go up and down, let them know that over the last 43 years, that's not true. As everyone knows, home prices depreciated during the great financial crisis. They appreciated the other 39 years. So a lot of people think that we go through these huge boom and bust cycles. We do, but it doesn't always end with prices in homes going below and actually retracting. That's really a unique time in history to the great financial crisis. So we had a big pullback in 1990, and that's what occurred, was home prices still went up. So keep that in mind. It's out of the norm to get these big pullbacks in the housing market. So when these guys talk about these gigantic crashes, they're really calling for something that doesn't occur very often in terms of history. And this also is a cornerstone of the entire economy. There's a lot of jobs that are related to home building and stuff like that. Tightening, what fed tightening? As we are loosening in terms of global liquidity index continues to loosen. So we don't have tightening, guys. We are still loosening in terms of global liquidity index and the Goldman FCI, which is inverted. We've got gold at an all-time high. Silver is 53% from the all-time high, and platinum is down 61% from its all-time high. So platinum is the cheapest, one of the cheapest commodities in the world, along with silver. And I still think that oil is something that's also in the same realm, because I think oil went to 148, I think it was, and we're at like 80. So it's also in here as well. I talked about this one before. I'll skip that. The latest comparative inventory analysis using EIA data through 228 calculated WTI fair value price of $81 a barrel, or about a buck undervalued from today's levels. So first quarter 24, total commercial petroleum stock change is bullish versus the historical QTD. So we're still a little bit undervalued when you look at the dot plot compared to history. Here's a funny chart when Wall Street analysts, I read this one last time, so we're going to stop it there. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you guys like. We just did our question and answer session. It's posted on the website. If you want to join Discord, I go on there all the time. You can ask me questions even on Discord throughout the week. I do midweek updates. I do question and answer sessions on the weekends. I tape them and I put them on the website so you can see all the previous ones. I have gotten more conservative with time. I'm choosing more conservative companies, sticking to cash flow companies that I think will have a high probability of success to push us forward. Lots of companies are doing share buybacks. They're really starting to accelerate those, and it's going to help shareholders with the share price appreciation with those share buybacks going on. And with where a lot of these things are positioned in terms of these sectors, they're cheap. They're cheap in relationship to gold. And if gold rips to the upside, that's generally a leading indicator. So that gold rips first and everything else kind of follows behind it. So it seems like things are starting to fall into place for gold to move on up. So that's what I've got for today. Thanks for viewing. This is Finding Value.